welcome to Financial Planner. It's that time of the day again where we sit back, talk about some financial concepts and then explain it to you in really simple, easy to understand terms. Today we'll talk about infra bonds, what it means. Is it a good time for you to put your money over there, and will you make some good tax saving investments if you invest where infra bonds? We'll talk about that plus a bunch of other queries. A lot of viewers have been writing in asking how they can achieve their financial goals. On the show today we have a certified financial planner Sumit Ved. He'll go through all of these queries with us. If you want to email us, you can always email us at financialplanner@utvmoney.com. If you missed the show, you can catch it on our website utvmoney.com, or always Facebook comes to the rescue. You can go to my page facebook.com/Smriti Rao, and you can find all our clips over there. So that'll take you right to YouTube. We're like a socially networked channel and a show.
That's true.
Right. So, Sumit, welcome, and let's get straight down to the questions coming to us via the old-fashioned way, email.
Sure.
And this is one viewer who says, I have about 30,000 rupees to invest. I feel infrastructure is a good place to invest in. Should I look at equity or debt, infra funds or infra bonds? What are the risks associated with it? So let's start off with, just the fact that this person has narrated to us all these different options that we have within infrastructure itself, that if you want to invest in infrastructure. Can you talk about what sort of options you have with infrastructure when people say, oh, I invest in infrastructure? What do they mean?
Thanks, Smriti, for getting me on this show, especially post-budget. Budget is made out to be a big event in India, which should not be, especially if you're doing your financial plan properly. Continuing the theme of financial planning, the first thing which we need to articulate to this particular, viewer of ours is that when you talk about infrastructure-oriented investment, you're becoming thematic. You're becoming seasonal. You're becoming an event-based investment approach, which is the biggest problem which we Indians are suffering from.
What is an event-based investment approach?
It basically means it's a flavor of the month, or a flavor of a season. So certainly infrastructure is in thing to talk about. Everybody's talking about India needs a lot of infrastructure. We need to invest a lot of money in infrastructure. So let's go and come up with infrastructure bonds, which is a debt-oriented instruments. In budget, a lot of SOPs have been given towards infrastructure funding. So infrastructure companies are expected to do well. So that's the place to go and invest. And certainly, you'll see a lot of interest coming from a lot of investors right here and there going into infrastructure. Now, to me, that's a big problem. Why? Because where does it fit into the overall financial plan is much more important than the thematic, compulsion of looking at infrastructure as something which is becoming really nice to do or in thing to do. So my response to this first will be, if you don't have a financial plan, get your financial plan. Get your goals into financial plan. Once you have your goals, then you try and articulate whether in your equity exposure or a fixed income exposure, your infrastructure theme can fit in. And that has to be articulated by your financial planner and advisor rather than in a scientific manner, rather than what is being talked about.
Right, which is what happens right now. And I know this for a fact that I have talked about infra bonds over the last show and maybe on a bunch of different shows. So it's pretty possible that people who watch business news channels or watch general news channels pick up on the theme that infrastructure is something that's being talked about. Maybe it's something interesting. But the point, like you said, is, where does that fit within your own financial plans and goals? Now, assuming your financial planner or someone, an analyst that you're working with tells you that, look, I think it makes sense for you to invest in infrastructure. So which one would work best?
Okay, now let's assume that you have had a financial plan. Your financial planner has given you asset allocation linked to the goal and within which there is equity and debt. Now you can take exposure into infrastructure on the equity side or on the fixed income side. On the equity side, you can buy directly into infrastructure oriented companies, or you can buy into thematic infrastructure funds. Now in both these ideas, I am going to caution you in an old way. To that extent, you have always seen me a very boring financial advisor who keeps coming back to a standard way of advising, which goes that once you have your goals right, look at diversified funds. Do not try and play thematic ideas yourself, because you and me are lay investors who will not be able to understand which theme is doing well at what point of time, whether this is a good time to get in, whether this is a good time to get out. Like for example, infrastructure was in theme 2 years ago. There were a lot of funds which were launched, which were huge funds, and people thought if India has to really grow, infrastructure has to come in. 2 years, nothing has moved. I continue to believe in infrastructure. I believe as bullish as anybody else is in terms of the infrastructure theme, that yes, infrastructure is required, especially after this budget, infrastructure will do well. But when will it move? How much will it move? Is it that risk I need to take is question I don't have answer in. I rather go to a diversified fund and let fund manager take a call whether he needs to take exposure into infrastructure for me or not. So that's to do with infrastructure on the equity side. When you come to fixed income side, there are a lot of infrastructure bonds in the market right now, especially IDFC infrastructure bond. They have painted the town red and they're doing great job. I think if you haven't taken exposure into infrastructure, from your tax planning point of view, you should use that limit of additional 20,000 rupees, which is available under Section 80C, to try and save more tax.
So you're saying infra bonds then would be a great idea?
From tax planning point of view.
From a tax planning perspective, yes.
But it has to fit into your financial plan. You know, you cannot keep tax planning separate and financial planning separate. And again, that's a problem in India. We do tax planning, choose instrument from tax planning point of view rather than what it helps us in life. A wrong way to do it.
Right.
Infrastructure bond, tax planning works, but it should fit into your financial plan.
Tell us about infra bonds itself for those people who are unfamiliar with the term. What does it mean? Where can you go purchase these bonds? How long do you have to keep them? How much will it cost you? And also how much, you told us about the tax savings, but run us through like the contours of how an infra bond works.
Okay, now infrastructure bonds are the bonds which are launched by infrastructure-oriented companies, and these infrastructure-oriented companies are specified by Government of India. For example, currently IDFC is on. There was L&T infrastructure bonds on some time ago. In this budget, they have given an additional limit of 30,000 crores to few infrastructure companies like HUDCO, National Highways Authority, IRFC, etc., etc. Various companies' perspectives were given as an additional infrastructure bond limit. Now, these companies are engaged in work of establishing infrastructure. So the monies which they mobilize through infrastructure bond gets invested in developing infrastructure over a period of time. Thing to remember in infrastructure, it's a long-term project.
Right.
It needs to be specialized institution which should be able to do it. You should look at the backing of that institute, and most of all, what you should look at is term of interest rates being offered in these bonds.
Right.
So ideally, if you are investing in infrastructure bonds, spread it out over 2, 3, 4 months. Interest rates have been very volatile in India. They'll remain volatile for some time. Instead of going and investing all 20,000 in first, infrastructure bond, don't do it. Spread it out.
Right. Which is another thing, of course, is it's a tax-saving instrument, and all of us wait till the very last minute to start making these investments.
Yep.
And a lot of investors wake up in February or maybe January and
they don't even wake up.
Yeah.
They wake up because their neighbor wake up. Somebody's asking for something.
Yeah. But your point is that if you have the 20,000 that you want to invest, don't do it all at one go, because the interest rates change so much.
It has happened. Last 3 months it's happened. Different infrastructure bonds at different rate of interest.
Right. And how do you pick a good infrastructure bond? Do you compare the rates of interest and see, okay, this guy's offering me, let's say 5%, and this guy's offering me 6%? Is that the way to look at infra bonds? How do you compare? Which one works for you?
See, I'm always partial to financial advisors and financial planners. In a question like this, I'll say that it's not your job to pick up. Go to a financial advisor or a planner who's an expert. It's like you don't go and choose medicines yourself.
Yeah.
You can't do it. It's tough.
Yeah.
It's almost tough. In today's dynamic world, it's very tough to get it right.
Yeah.
So I'll not propose do it yourself, but if you still insist that you have to do it yourself, then go for well-known names. IDFC is a fantastic name in infrastructure, bond arena, very well established, very visible, very good in customer servicing, and they usually come with decent returns also. So go into that, because it's required that you get into bond which services you very well.
Right. And just talking about investing in infra bonds, Sumit, but people need to know that this money is locked in for some time. This is not something that you can expect immediate returns on.
True. As I said, long term.
Right, 5 years is the lock-in.
Yep. And it has to fit into your financial plan. Many a time we see people, while investing, don't think through whether they need the money or not. And after 2 to 3 years, they come crying towards financial advisors and say, now I need money, I can't take it out, what instrument you have given it to me? And they start comparing with the interest rate at that point of time. A wrong way to do it.
So this would work for someone who doesn't need the cash immediately, clearly. I mean, then that's clearly something for someone, let's say, who has upcoming marriage coming up, or you're expecting a baby in the next year, 2 years.
True.
So then it wouldn't work for people like that.
My standard answer, link it to a goal, and this goal which you link it to should be 5 year plus.
Right.
So, if your daughter is getting married 8 years down the line and you need to allocate 80% into equity and 20 into fixed income, this gets into 20% fixed income. If you are getting retired in 6 years down the line and you need to go do a balanced portfolio which is 50 equity, 50 fixed income, this goes into 50% fixed income because you have a 6 year time horizon.
Right.
Anything which is less than 5 5 years, don't even look at it.
Right. Also, like Sumit keeps saying, talk to your financial advisor. They'll be able to tell you exactly what would work for you, and if infra bonds is something that would work for you. Okay, let's take a quick break. When we come back, one of our viewers writes in and says, I want 1 crore after 20 years. How do I go about achieving that? I want 1 crore in the next 5 years. How do I go about achieving that? Sumit has some ideas, but we'll talk about that when we come back.
Yes.